Good evening and welcome to the Australian Stock Market Show. We do hope you've had a great week and are staying safe. Jim Rome, famously said, formal education will make you a living, self-education will make you a fortune. So tonight our aim is to help you along the way in making your fortune. So be ready to learn as we take you on a journey covering many ideas, interesting topics and stocks. As always, our aim is to educate and inform you as we answer your questions and bring you our no BS approach, or upfront no BS approach to all things stock market. Our main topic for tonight is Australian miners fall 20%. Is now the time to buy? Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Good evening, and let's get into tonight's show. I'm raring to go.
Oh, God, I'm not sure what happened to your mouth. It wasn't working that well then, was it?
And I was seeing double.
You had a big day, have you?
I have, yeah.
Really?
And last night as well, looking at the stock market and, yeah.
Well, I had a big day. We had no power today. They cut our power off.
Yeah, you had your thermals on, did you? Today?
I had my thermals on. I had the lug wood and everything to turn the open fire on and stop
What's
us from...
that little song? I'm a wood chip.
I'm a wood chipper, chopper, and I would chop if I could chip. What I don't know anyway.
No, look, I just wanted to say something about last week's show. So we talked about ETFs, didn't we, last week? And I really wanted to emphasise something that I meant to tell you last week, and that is that if everybody buys ETFs, then there's going to be all the ETFs, the funds,
You're talking
essentially,
about index ETFs?
Index ETFs are going to have power over the companies because individual shareholders will lose that opportunity, and therefore, you know, it's going to be very concentrated in terms of who, in terms of the voting rights and who's going to be able to influence those companies. So I just want to add that little comment into the mix, and hopefully you really think about it. Americans are extremely patriotic. I think Australians love their country generally, but I don't find us to be...
Well, that's reason number 5, not to buy an index ETF.
Really patriotic.
Yeah, look, I think you're right. Don't buy index ETFs. Anyway, Janine, before we get into tonight's show, again, we're going to take some live callers onto the show tonight. So if you're just sitting there thinking to yourself that you would like to ask Janine and I a question, then this is your opportunity to call now and speak to us live on the show. Now, the number you need to call is 03 for Melbourne 9290 9988. That's 03 9290 9988. So pick up your phone and get dialing.
Moving on, it is the 4th Tuesday in the month, and this means we take a look at world currencies. So let's get into the charts.
Now, on your screen is a watch list of the Aussie dollar. Now, it's monthly, because I did check that before the show, just so you couldn't sneak that one in on me. So this is the monthly results of the Aussie dollar against the major world currencies. So what are we seeing right there, Janine?
Look, what we're seeing here is
I see red.
Yeah, exactly. So everything's down for the month, as you just said. So from the Australian dollar versus the Canadian dollar, down 0.36%.
Not much.
All the way down to the, I'm going to skip through all this, all the way down to the Aussie dollar versus the US dollar, which is actually down 1.84%. So we're not faring as well against the US dollar, but there haven't been any real major moves this month by the look of that. So just overall, I mean.
So what's causing the weakness in our Aussie dollar against these US markets, or the other markets?
Well, we've seen commodities fall away, so that's going to have a bearing on things.
What else has fallen away?
Copper. You know, I think it's just a bit of a current short-term trend change we're seeing. So we've had a bit of a reversal there, and China's changing their position on iron ore and some of the commodities, and so that's bound to have an effect for a while. But you've got to expect a pullback because of what has gone on in the previous year. That the rate of increase that we saw is not sustainable over the longer term, and it's natural for markets, and particularly for commodities-related markets, to pull back in a more volatile fashion than, say, what ordinary stocks like a bank would do.
So basically what you're saying is our market, or our Aussie dollar, is affected by commodities. Commodities prices rise, and our Aussie dollar, it rises with them. And if the commodities fall, our dollar falls with them. That's what you're saying, yeah?
Yeah.
I just want to make sure it's clear with everybody what's going on.
But there's
at the
other
moment.
things that impact
There's
on
other
it.
issues, yeah.
And we could do a whole show, really, on this topic. It's not something that I would vote for. As most people know, that's not my favourite topic. However, we could do that if you want.
Yeah, I mean, to me, it's always about with cause and effect. What makes BHP move? What makes the Aussie dollar move? What makes interest rates move? There's always a cause and effect. So, what economic things that should people look for?
I would say first go to the RBA website and read their bulletin.
Yep.
Yeah, it's really good to keep up to date with what they're saying about it.
Okay, so anything else you want to say about the Aussie dollar?
Not really. It's just interesting to see the Australian dollar versus the Chinese renminbi yuan at minus 1.53. And then, so it's all about, at the bottom of the board, it's more or less the Australian dollar versus the Asian currencies that we're seeing these bigger moves in, and the US dollar.
So you're thinking of maybe a little bit more of a dip, the vacuum will be there, then it'll start sucking up all the commodities.
With the commodities,
prices start going up again, and then this will go up again.
Yeah, but look, I mean, we've got some more things to discuss, obviously, in the topic, and I don't want to get into that too much because we're going to touch on that.
All right, let's move on.
All right, well, this is all from us about world currencies, and now it's time to get into our first email for the night.
Okay, our first email tonight is from Diane, who says, "Hi, Janine and Dale. Our question today is about buybacks. Now, we're interested to know your thoughts on how this affects the stock price and the implication on the stock future price, and if these stocks are worth pursuing or not." Now, a recent example we found was Magellan Financial, or Magellan Global Fund. We don't own this share, but have been watching it. Thanks again to you and your team for putting on a very informative show, and congratulations on being certified as a great place to work. That's a fabulous achievement and a direct reflection on the quality of management you have. Thanks for the great work, and we hope to have you have a fabulous week. Kind regards, Diane and Daryl.
Fantastic. That's
Fantastic.
awesome.
We also had the same question from Mai, and I think Mai's put questions through to us a few. So thanks for sending in your question to Mai. So we're going to look at that as well.
Okay, so we've got the chart up there for Magellan Global Fund, and we can see there that in recent times,
buybacks?
I've only got, first of all, I want to talk about the chart before we go to the buyback.
Okay.
So we need to just sort of understand the big picture first. So if you're looking at a stock price, what often happens is that, and you can see the Magellan Global Fund shown there on the screen, and we can see that from this high here, which was in 2020, December 2020, it's basically fallen for 3.5 months or thereabouts, and then risen off that low. Now, the impact of a buyback can actually lift the price up. If the stock price is falling, it can support that. And we saw this happen with other stocks. So we've seen different corporate actions with some of the banks as well. So, for example, ANZ, which has held up much better than the other banks during the recent pullback that we've seen. And this Magellan Financial or Global Fund has actually lifted probably, if you look at the high price, it was $2.04 up here in December 2020, and we look down at the low here and we can see it's around $1.55. So roughly a bit more than half of that distance is where it's actually managed to get above, which is a really good sign for the stock at the moment. Yeah, so on the weekly chart we can see that better.
So on the right-hand side,
it's helping to support. Thank you. I'm using my hands, but nobody can see.
Nobody can see your hands.
It's like the Italian, just getting that. And so off this, pullback that we've seen in August, we can now expect that there could be a rise, at least short term anyway. So I'd be watching to see whether the stock can get above this high of $1.85 and do it strongly, and head back towards 190. Yeah, but a fall below. In saying that, a fall below this bar here, which is actually week ending the 9th of July, would signal that the stock's more likely to go the other way.
So we like Magellan, and buybacks are supporting the share price. This is what we've talked about a couple of times.
Yeah, it depends if you want to buy funds though. In terms of listed funds, do you want to be doing that, or do you want to be buying stocks? And there's no history here. So, to make a really good judgment about it, it's not easy to do when you've got very little data. Okay. Well, if you want to talk to Janine and I, remember the number 0392 909988. 0392909988. So perfect time to call right now. Our next email is from Kane. Hi Janine and Dale and team, wondering what your thoughts are on A2 Milk. The share price has been volatile over the last few weeks, and I'm currently holding a position in the stock, Purchasing when I believe the downtrend may have been broken. Currently down, however, looking for your views on its recovery and what the charts are telling you. Thanks for the entertaining shows. Cheers, Kane. Thanks very much for your email. Now, looking at the chart there, Dale, of A2 milk, this is something we've been watching.
He was bottom picking, wasn't he?
Yeah, this is something we've been watching with interest, isn't it?
You know what happens when you bottom pick?
Oh, don't tell me. This is going to be terrible.
I know, you get yelled at by your mum.
Oh, jeez. Okay, I laughed at that because I just feel sorry for you today.
It is. I mean, I would assume he bought it on that move up off that bottom from May and that nice big strong rise. Because a lot of people were wanting to buy it because they're thinking, oh, it's cheap, it's moving up in an uptrend. And I said, no, not necessarily. It's not really.
Well, the trend hadn't been confirmed.
No.
And the stock had actually, it had crossed a trend line. Mm-hmm. And now it's come back 20% to make that low and is trying to push back up again. But last week it actually closed really low below the halfway mark on the bar, which is not a sign of strength. Mm-hmm. So we just need to see it kick on. What do you think?
And the thing is, that's where we talk about is not necessarily trying to buy at the bottom because you could catch a falling knife. Now, so he didn't catch a falling knife on this point in time. He didn't do that. But he probably bought in a little bit too early because it wasn't confirmed it was going up. So,
do you think he was seeing dollar signs?
Oh, look, a lot of people were at the time, and it's not just Kane. A lot of people were just picking it up because you can see the volumes increased on the stock. A lot of people are going, wow, this stock, if you look at the chart, I mean, this stuff on the left-hand side, this was at $20, and we're talking about it hit $6 or under $6, $5.
Yeah.
So
it's about a third.
It's about a third of that. And so people are going, wow, I can pick up a $20 stock for $5.
Yep.
So they jump in and they're thinking, wow, this thing's going up now.
And there were some rumours about takeovers and things like that.
There was rumours and all that sort of stuff. But it was just too early. And this is where it's a high-risk trade through here. It really is, because there's no confirmation of the up move starting, that the down move hasn't finished, because you can see there's moves counter all the time to the downward move. That always happens, so we just need to be a bit more careful. But I like it now. Still a little bit too early, but I do like it.
Okay. Great.
So that's my take. Moving on, we do have a question from Tobias who says, hello, I'm very new to trading but would love your thoughts on the stock IGO and what you think the mid to long-term prices could be. I've done a lot of research on this stock and it all seems to point to being a bullish rise, but I would just love to have your perspective on the stock. I am looking to put around $10,000 into it, but being 19, it is a large sum in my portfolio, but I also don't know if that is a good idea or if I should try diversifying my portfolio a bit more with those funds. But if so, what sectors? I love the channel and the work you do. Kind regards, Tobias.
Really great question for a 19-year-old. I'm impressed.
So, okay, let's handle two things. First thing is diversification. He's putting $10,000 in, saying it's going to be a large part of his portfolio. What would you advise Tobias to do?
Look, I wouldn't necessarily. I think that if you read Dale's book, you get a really good understanding of how to actually structure a portfolio. So that's the book that's actually free on the website. So when you go to the home page on the website, there's a little orange box. Get the free book. You just pay the postage. If you haven't read the book already, it's really important that you do, and that will help you work out how to actually structure your portfolio, whether you've got a small amount or a large amount of capital. That's how it's set up. In terms of putting your money into a I would say this is a medium to high risk share from the point of view of the volatility of this stock. So if we just look at the monthly chart for a start, we can see how this stock moves. And during COVID, when it fell away, we saw it fall more than the market, so 54% decline. So that's just giving you some indication of what's going on there. Now, this is actually following what the big miners are doing, because you'll see this low down here in 2016, pretty much, the same sort of scenario as what the big miners have done. They made highs in 2011, this one in 2010, so it fell sooner. But it's just a similar sort of pattern, but much higher, greater levels of volatility than they are. So I would say there's good opportunities to be made in this stock. I like it. The fact that it's gone to a new all-time high recently, so we can see the all-time high was back in 2008, the GFC. It's only just made it through, and stocks will often pull back after they've gone through those highs. But I think long-term it has really good prospects based on the fact that it's done that. It's just that I wouldn't be picking it up right now, given that it's just been up solidly for a couple of months. We need to just let it pull back a bit before taking a position in it. However, should someone who's 19, who's limited capital, be putting their money in a stock like that? Generally, I'd say no.
Yeah, I'd have to agree with you. I think, to me, it's more about spreading your risk to bias. But what a lot of people don't take into consideration, when you're young, you're learning. And this is even 80-year-olds who've never been in the stock market before. Is the first part is to learn how to buy and sell and how to get your portfolio going. And it's what you don't lose that determines how much you make. And so what that means is not losing a lot in the initial stages while you are learning. So you go for low volatile stocks, you go for safety all the time while you're dipping your toe in the water, if that makes sense, and so getting comfortable with the market. So that's what I would suggest you do.
Yeah, he's asked about what sectors, and I still think some of the mining stocks are good.
Yeah.
We're going to be talking about these tonight. We've seen a bit of a sell-off there.
Yep.
I would say just look at some of the biggest stocks in the top 20, as Dale talks about in his book, and some of the healthcare stocks like CSL, the stocks like that are great stocks to have in your portfolio. In the past I would have said Woodside, but not at the moment.
Not at the moment,
Just too much going on in that space. Yourself, have you got another stock that you think's a good one for young people? A bank?
There's a couple of good ones, yeah. I do like some of the banks.
Macquarie and...
Yeah, I do like some of the banks, and I think they're going to be looking after you. And I think that's the point is not... don't think about how much money you can make on a stock. Think about how much you could possibly lose if you get it wrong. And that... to me, that's really the key here is go for safety right now, build a solid foundation, get used to the market, and then pick some stocks like this later on, but not right now. But if you do want to talk to Janine and I, remember 0392909988. Pick up your phone, call us now.
Our next email is from Peter. Hi, Dale and Janine. Thanks for the show. Enjoy listening to the show every week. Great source of knowledge. Thank you. My question is, I have BHP shares, which I acquired when I worked for them through their share match program when they did the demerger, and my shares went to the London Exchange, BHPB. Is there any way I can have them transferred back to the ASX without selling them? Kind regards, Peter. That's a really interesting question. I haven't come across that before. And I was thinking that perhaps it could be something that you could contact the BHP Investor Centre. So on BHP's website, they've got an investor area. Go and look up that and have a look for the phone number. Call them and see if they can assist you in that regard. And I'd also perhaps try the registry if, the share registry that looks after BHP stocks. So they may be able to shed some light on that information as well.
It's a different company. In the UK, it's BHP PLC, so it's a different registered company, even though it is BHP. But
so you think perhaps the broker might be a broker might tell them?
No, my guess, and it'd just be a guess, it really is a guess, that the answer would probably be no. You probably, because it's a separate company, but it doesn't mean BHP haven't thought of that before and have some sort of thing
that's what I was thinking.
Get that to happen. So again, I'm with you, I'd go to the Investor Centre at BHP and say, this is what's happened, or this is how the situation is, what can I do? But you may need to sell them anyway. But with the Aussie dollar going down against the British pound, you probably want to keep it in BHP PLC for a little bit longer, wouldn't you?
I don't know.
Make a bit more money on it.
Taking a bet there.
But yeah, just contact, as I said, or as Janine said, just contact the Investor Centre and ask them the same question. So they're much more qualified to talk about that than we are. Now, before we get into the topic later on the show, we'll be taking opportunities for you to call Janine and I and ask that question live on our show. So please stay tuned for the opportunity and get ready to dial when we tell you to call in towards the end of the show. But now really is the time we get into tonight's topic. The Australian miners fall 20%. Is now the time to buy.
Last week, iron ore fell swiftly, and as a result, BHP, Rio Tinto and FMG all fell around 20%. Commodities like iron ore are cyclical in nature, and the more volatile the commodity, the more likely it is for the underlying stocks to change quickly. It is for this reason why we love these stocks, as you can profit very quickly, but this volatility also means it's very important for investors to stay informed and have solid rules around these stocks and be prepared to exit when risk increases. Before we get into our current view on these companies, we will share with you how the picture on these companies has changed in the short term. We'll also discuss why it's important for investors to carefully consider what the charts indicate when considering whether now is the right time to be buying these Australian mining companies.
Now, whilst we can predict what a stock or market will do, most of the time. Unfortunately, we actually don't have a crystal ball now, because trading is about probability, not absolutes, and sometimes circumstances will change more quickly than the original analysis indicated was likely. Now, our aim has always been to impress upon you the importance of never just blindly following others' opinions, even expert opinions, when making your own investment decisions. We've always encouraged you to do your own research so that you understand why you are buying, whether the stock suits your portfolio, and most importantly, the risk you are taking and how indeed you will manage that risk.
In January this year, we covered the big miners on the show as their share prices had improved on strong demand from China. Our analysis at the time indicated that a peak in price was likely for the iron ore miners in February or March, followed by a short fall and the resumption of the longer-term uptrend. Prices did pull back and all three stocks formed lows in March before rising again. Dale shared on the video in May to expect a short-term pullback when volatility in iron ore prices had increased, and that there would be some great buying opportunities to follow. Now, all three stocks respected the analysis and pulled back to form short-term lows in May or June. BHP and RIO eventually moved higher.
Now, in July, China announced that they would cut the cash Chinese banks were required to hold in reserve, and the market immediately pushed the prices of these stocks higher. The analysis indicated we were likely to see strong gains in RIO, BHP and FMG over the next 1 to 2 years, and that RIO was likely to outperform BHP in those 1 to 2 years.
In that video in July, Dale said that we cannot predict what will happen in relation to COVID and how COVID can impact these stocks, and went on to say that as more data emerges, our opinion may change to reflect new information, and more data has come through. The ABC recently reported that strong demand for iron ore from China occurred as part of a response from China to the impact of COVID on the Chinese economy. However, demand is now slowing. And Commonwealth Bank, an analyst at Commonwealth Bank, reported in an article that he believed the weakness in steel is due to widespread restrictions to contain the latest COVID outbreak, and that China is cutting back on steel production. Further, the ABC reported that Chinese authorities will also cut production further in Q4 of 2021 in the lead up to the Winter Olympics to curb pollution.
Now, commodities do at times fall quickly, and rebounds are often swift. With high iron ore prices well above the cost of production, the big miners can continue to make great profits, but of course, as prices fall, new contracts are struck at lower prices. Now, tonight, we will share our thoughts on what to expect for the iron ore price, and we will update you on our current forecast for the big miners in light of recent price volatility. We'll also share our thoughts on the time to buy. Let's now get into the... Actually, we're going to go into the charts now, aren't we?
We are. Just quickly, let's get into the charts, because we've got the global price for iron ore on the screen there that we've got out of Optima, which is fantastic. Yep. So I previously used to use some websites and just use the data off those websites, but I don't need to now.
This is not quite 100% up to date though, is it? It's still a bit lagging.
No, because it's lagging a little bit, and it's based on the contract price for July.
Okay,
so we haven't seen that come through for August yet. Okay. So this is what we're waiting on. But we do know that the price has come down below, it's about 137 I think it was, but it may have changed today.
Down?
Yeah, so it's a significant fall. So let's just have a look to see what's gone on. So we're seeing a drop in value. So it's between 30 and 40% decline, I think, at the moment.
Okay.
It's been down. I've got had some support levels here, which I was expecting that the iron ore price could actually come back to. So one was around this 165 mark, and the next one's around $1.31. So it's not out of the ordinary to expect a volatile thing like a commodity to actually come off on the downside. Now, in a COVID environment, we're seeing really swift action happen on stocks and markets out there. And I guess in the Australian market, one of the things that concerns me is, like I was saying in the chat at the start, that with the control, so much control being given to, I guess, prime brokers and short people who have got access to the stock to short sell,
and the algos and all that sort of stuff.
Yeah, that it can move much more quickly in these situations, and we're seeing that happening. So we thought that perhaps, with COVID being past, that perhaps in this climate now. We might move through to a new phase, but we're seeing more of that happening. And look at the commodities. It's not unusual for commodities to fall fast, but how quickly. And there's a lot of talk at the moment in the media about how the government budget estimates were in December, where the iron ore price were for an estimate of $55 a tonne, right?
Yep. So we're well above that.
Yeah, we're well above that. But what some of the journalists have done is they've grabbed onto that and saying that the government thinks that iron ore is going to fall to $55.
No, why would they?
In 2022, which is absolute rubbish. That's not what the actual whole point of the budget estimates are. It's about being conservative in a COVID environment to make sure that we're actually covered in the event that something else unforeseen happens or they get a blowout somewhere else in the budget.
It's called a sensitivity analysis, isn't it? So the journalists aren't that sensitive.
Oh, I don't know.
Well,
I don't
you
know.
do. You always,
I don't know who's
you always
writing this stuff, but they actually drew a line, a linear line, straight down to $55 to show where the government, was expecting it to fall to.
But it's just smart. You just pick what's the least you think it probably would go to, and you make your budgets on that. And if you make more money from taxes above that, then that's the bonus, isn't it?
Yeah.
And to me, that just makes more sense, doesn't it? You don't budget for revenue coming in and not have enough to pay
when we look at the charts, as you know, so we're looking at areas. Now we can show you on the chart here. Now these are, I'm just going to expand one of them out because it's just a line chart. It's not a bar chart. The availability is not there of that. So we can show the whole history of what's happened with the iron ore pricing. Now, one thing we know is that in 2011, the output in terms of the amount of iron ore that was being produced in Australia is actually doubled. So what the miners are actually able to export is actually gone up significantly since then. So the price has been hovering around the same levels. Now we know that contracts are formed all the time in terms of iron ore pricing, so that can change from time to time. So what you think the miners may be getting, they may not be. So that's where you've got to be mindful as well of what's going on. But as a technical analyst, all we can really do is have a look at the chart and then forecast what we think is likely to unfold based on history. And at this point, we can see that, is it unusual for the iron ore price to fall that quickly? Yeah, it hasn't done that. Not like that in the past.
Like that in the past.
But is it unusual for the iron ore price to rise as strongly as that?
No.
Well, it's done it once. So we saw here in 2009 when we were in this situation after the low, the market low, after the bottom of the GFC, that there was a big boom in terms of the price of iron ore. So that went all the way up into 2010. So we've seen a boost there, but is that we can see this rise here is much stronger. It's not unusual, but it's much stronger than what we saw back, post the peak in the commodities cycle that occurred in 2011. So I think to us as technical analysts, that tells us that this market, as in the iron ore market, is on a whole different trajectory at the moment to what it's been in the past, and we'd expect that because patterns, tell us that. So at the moment, I'm expecting that the iron ore price will get some sort of support around this level at around 130. And I know that history shows that over time that it likes to hover somewhere between the $100 mark and around this zone here, which is close to a 140.
130, 40,
So to me, that's probable that the iron ore price is likely to find support and trade within that range for a time while things settle down and the market adjusts. The supply and demand equation's changing at the moment because
the miners are profitable at that level anyway.
Yeah, they're hugely profitable anyway at that level because the cost, the miners did an incredible job post the bear market in the mining, in mining, right? Which they say happens roughly every 7 years, but it's actually quite different to that, I think, when you look at some of the charts. But, because we know historically that big miners are very cyclical.
Yeah, they're very cyclical,
Yeah, and they work, over time, they work very closely together often in these cycles. So we're looking at a cycle coming in, but I don't think that this is the end of it right now. I think that it's just about resettling the price back to... It's a pause, but it's very volatile because of the nature of iron ore and commodity space.
So let's go into the stocks. We're going to talk about BHP, RIO and Fortescue. Now, I know we did get emails from people on, say, hey, talk about FMG or RIO or BHP, what's going on, what should I be doing? So I didn't put those emails into today's show because I knew we were going to cover them anyway. But let's go and look at
That's a
BHP
really good thought.
first.
Yeah, so BHP, well, we've recently seen BHP go to a new all-time high. So right here on the screen, you can see how BHP's share price has rocketed through the 2008 high. And note how BHP didn't make a new all-time high in 2011. It came up to test it, traded down. This was a long-term decline for BHP. Look at how much time there was from 2008 high all the way into this low in 2016.
So it's 8 years.
It's 8 years of a decline. That's a long-term low for any stock, right? So we know from that BHP is likely to be in a long-term rise, bullish cycle. But at the moment, the market is really in flux. And so this is why we're likely to see a little bit more volatility. And it surprised me, actually, that it pulled back as hard as what it did. You know, there was a potential for it to have a bit of a pause at around $54. We had some resistance at around that level, but
it pulled back really hard into 2020 too. So hard pullback pretty quickly, isn't it?
Yeah, I know, but let's just have a look for a second. You know, we're talking about a pullback in 1 week. You can't tell me that's not manipulation.
Oh yeah.
You know, so what's happening in our market right now? You know, the regulator needs to have a really close look at what's going on, because if BHP has not been sold off like that in the past, let's go right back, right, and have a look. So, you know, if they're looking, if we saw these sorts of moves, a couple of them right at the bottom of the market, we're talking about pullbacks that are happening at the top, right? And you and I have both been talking about the change that's happened over recent times.
So you're suggesting some of these brokers are selling out of their house accounts or selling stocks out of hedge funds or whatever else, just pushing, short selling, whatever it is to push the price down, only to come back and buy it cheaper.
Yeah, look, whether there's collusion or what going on, I don't know. I'm not going to say that, but we've all seen things in the movies, haven't we?
Well, we might hint it.
Yeah, but, you know, also, you know, what's happening with the short selling. You know, people need to keep abreast with what's going on in that regard as well, but that's just not normal.
That's just definitely not normal. So what do you think of BHP now?
I still like it.
If you owned it, what would you be doing?
Look, I mean, at this point in time, I'd have to say that if you have rules on the stock, you just follow the rules. So if your initial stop losses have been taken out, you need to get out, because that's a rule and you need to stick to it, even though you never fall in love with a share. That's the thing. So it's about just managing your risk and making sure that you exit.
Medium to long term?
I think medium to long term, I'm still bullish on them all.
Okay, so let's go to the next one.
Okay.
Okay, so we're looking at RIO now?
So we're looking at RIO, similar sort of thing. Again, totally out of character. We'll just switch to the weekly chart here.
So it's 2 heavy weeks down on this one?
Yeah, so this is like a COVID pullback. Now, come on. You know, what is going on? Somebody's got to look into this. And I think I've flagged before that my really big concern was when the Royal Commission came in and they changed the broking industry and the banks withdrew from the broking industry, that all of a sudden you've got all of these prime accounts and accounts where people's stock can be loaned out for short selling and stuff. So we're much more, I guess, vulnerable to these sorts of things. And so we're looking at a situation that happened when the mining sector was going into a bear market, right? Just after the peak here, when the mining cycle was actually ending and the big miners were all cycling down. So to us, this is not the case right now.
No.
But we still need to be alert to the fact that, you know, that things are changing. I think one of our listeners wrote in about support levels.
Yep.
And we could get to that soon. We're looking at this huge support level across here from RIO. It may find support at that level, but it may not, because it's right in decline now, and to try to buy it, you'd be catching a falling knife, and it's a fool's game to do that sort of thing.
So if you're not in BHP and RIO and Fortescue right now, stay out.
Yep, now's not the time to be buying them, but it's about watching for when some rules trigger. We may not be able to get trendline entries, Dale. That's the thing people have to realise. So they're going to need other rules to be able to buy these stocks. Now, the Trading Mentor course teaches one type of rule, which is really helpful for some of these types of shares.
Very helpful.
That may give an opportunity down the track if trend lines don't allow us to enter. So, so FMG, let's just do a comparison with FMG.
Looks different, doesn't it? Looks a lot different.
It looks different, but this could be a topping pattern, which, you know, when you're saying there's a potential for downs, we could FMG, the worst case scenario is FMG ends up down at $14 or thereabouts.
It ran harder than both BHP and RIO for so much longer than those two stocks, so therefore it's probably got more to come back.
That's right.
So
it's got more room to move, if you like, and could it, like you say, could be a little bit more volatile than the others. So we keep on seeing something pop up on the screen there.
Never seen that before.
It's just like a fly, isn't it? You know, when you're at a barbecue and the fly just keeps buzzing.
Get out of my steak.
I just, yeah, I can't
having
say
a fly in your porridge.
Yeah, I can't say I've eaten one, but I've had one go up my nose before. Have you had that?
I'm not even going to open my mouth. I'm just really not. You might catch that one.
Okay, so when we're looking at this, you can see that double topping situation coming in. We haven't yet taken out this low, but alarm bells go off when if that low gets taken out as well. So we could come into that decline I'm just referring to before.
Yeah.
But I'd rather see a bit of consolidation happen now. You know, the short sellers would be pretty brazen to try to sell short from here, I'd say.
Yeah, probably, but I wouldn't put it past them either, too, to drive it a bit more, because the more they short it, the more people might want to go, I just want to get out, and then they push it down further, and then the short sellers start buying back to cover their positions.
Yeah,
you know,
so what we're saying is we're not advocating to buy RIO, BHP or FMG. And look, you know, from time to time we buy stocks for our clients and we get taken out. It's just part and parcel of trading the stock market. And I mean, we had that happen recently with RIO, so that's just you know, par for the course, isn't
it is. I mean, I always say to people, if you're in the stock market is the only game where you know you're going to lose before you start. And I don't mean you're going to lose overall. I just mean there are times when you're going to lose money on stocks that you own. You buy in thinking it's going to go up, and then news or something happens, or, you know, announcement, takeover, whatever happens, and either shoots up or shoots the other way, and you get taken out and you lose money. And you just got to get used to that sort of stuff. And the more you get used to selling, the more money you'll make. And I'll say that again, is a lot of people think that's really backwards. The more you get used to selling, the more money you're going to make, because the quicker you sell from the downside and you're selling at the right spots, it'll leave your money to compound and move further. But we see too many people hang on to stocks for too long, don't we? And they go down and down and down for years, and then they take years to get back up to where they paid for them again. So it's better to cut your losses short, let your profits run, which is a really golden rule that we talk about. Yep. Any last words on the miners?
No, I don't really have anything else to say. I think I've sat on my soapbox and talked about it for long enough.
Well, look, I think everybody's an expert in damn hindsight, aren't they? Everybody knows exactly. They can say, Dale and Janine, you got it right, you got it wrong, whatever we did over the last 6 or 9 months on this. But at the end of the day, you know, at the end of the year, we'll know whether we got it right this time or not.
Yeah, and we're going to keep you updated over time with what's happening on the big miners. So we'll come back at some point to talk about them further.
Okay, well, that's all from us now on the big Australian iron ore miners. Now, before we get into our next email, if you do have your phone ready, and hopefully you do, you've got it out of your skyrocket, and you've been patiently waiting for the opportunity to call into the show to have your questions answered, now's the time to get dialing. The number you need to call is 039290 9988. That's 9290 9988. Come on in, get us a call. First in, best dressed. Now, while we wait for your call, we're going to get into answering our next email. Now, the next email is from Nash, who says, "Hi team, appreciate your thoughts on a stock that's taken a bit of a fall in the last 6 months, Triple M Marley Spoon. Perhaps it may have bottomed. Your thoughts? Cheers, Nash." Marley Spoon.
Yeah, look, I mean,
why
there's
would
been
that
a bit
be dropping on COVID when they've been delivering so much more food?
I don't know, but there's been a bit of an explosion, hasn't there, since COVID, in these sorts of companies that are offering these ready meals or recipes that you can cook up really easily. It's listed on the Australian Stock Exchange, but it is actually owned internationally by a parent company. I think it's Germany where it's owned.
Probably.
And I think it is. So, you know, when I looked into this, I thought, oh, that's a bit disappointing. Okay, it's listed on the Australian Stock Exchange, and obviously Australians do own it. But, you know, obviously there's a parent company overseas. I think there's another one that's listed on the Australian Stock Exchange that is, yeah, and I read about it today, but do you think that I can remember what it is?
Well, there's a few. Like I did a video with Jim Beach a couple of weeks back on the fastest growing emerging companies in the US. All of them are unlisted, and the top number one for the last year is one of these types of companies.
But they're small. Like, that's the issue. The volatility is going to be high. The risk is high with these. What I like right now is the
Okay.
pattern
The
that's
pattern.
unfolding on this share. So
Okay. Well, show people.
when you learn about
You've got a
technical
mouse.
analysis, one of the first things that you get to learn is understanding price, and then you get to learn pattern, which really ties in. And I've done put together a couple of recordings recently on the financial sector, which talks about price, pattern, and time. Oh, thank you. Can you be my assistant and click that off for me?
I will. I'll do it properly.
And you can see we've got a really nice zigzag move down on this share right now. So we might find some really strong support just below where it's currently trading. I'm not saying that the low's in yet because it's still unclear, but there is a potential for this stock to find support close to where it is now. Some of these stocks you could potentially get trend lines on, or it could be a rule, one of the other rules that triggers. So it could actually make some nice money over time, but I would be looking at this short term more than anything if somebody was wanting to trade it. So that's my view on it. Did you have any comments regarding the question?
No, I just think, you're right. I mean, you're always right anyway. But I think right now at the moment it hasn't confirmed it's stopped falling yet, but it's one to watch.
Yeah. Okay, so now we have a question from Theo. Hi, Janine and Dale. Great weekly show. I really enjoy the analysis and, more importantly, the banter. I'm looking towards the future and into green manufacturing like 3D metal printing or additive manufacturing. And there's a company with great potential like 3DA, Amero International. What are your thoughts looking at the chart and considering their relationships with Monash University and the likes of Boeing? Is it still a speculative stock or industry, in your opinion? Much appreciated, Theo. I had to laugh at what he was saying about the banter because when I speak to some of the guys who are interested in our direct equity managed account service, they're telling me that they love the fact that I give you a hard time.
Everybody gives me a hard time, so don't worry about it. I like this stock. It's one of the ones I've been watching for quite some time, Amero and all this 3DA, and I've been watching it for quite a while. It's, I've got a watch list of just stocks that like Atomos that I mentioned about 6 or 7 weeks ago. That's now 50%.
Yep.
So this is on my list. So I've got this one and a few others, and I won't tell you the others. So this is on my list. That's how much I like it.
I'm going to challenge you right now because you've just left the gate wide open.
That's a squeaky gate.
Yeah, it is a squeaky gate. So we're looking at this. Is it possible that that is a topping pattern and that we're about to see this stock fall through that floor there at, what's the low? 43 cents?
Yep. Something like that, 43 cents.
Now tell me, do you think the stock is likely to fall through that low?
I don't think so.
Okay.
I don't think it's possible, but I don't think so.
But what does it need to do in the next 1 to 2 weeks to confirm otherwise?
Oh, look, if it keeps going down in the next few weeks, because this really has been a nice tight little pattern. That's why I haven't bought into it. I've been watching this, at least all year. So I've been watching it for about 6 months.
But I bet the last couple of months surprised you, like the close last month, down so strong.
These few bars, I didn't expect it to go too much further, but right now it is looking a little bit bearish. But I think, if we just draw a horizontal line here and across here, I think if we start getting through this sort of levels, then it could go right down through into this area here. But I don't think so, because of some of the fundamentals behind it is good. They are good. Like even with Atomos that I was talking about, like it's got 50%. It did its announcement or its reporting last week, and the reporting wasn't fantastic. So it was zero reason for it to be up 50%. Like even the day after it reported, it still hadn't gone up.
Yep.
But then I think last Thursday or Friday, it shot off like a rocket.
Okay,
for some
small
reason.
stock.
Yeah, it's a smaller stock, but it's up 50% since I brought it up. So there's no reason that with what I've looked at this stock in terms of its fundamental side, because obviously what our viewers talked about with Boeing and the other things, there's some really good things that it is actually doing. So it wouldn't surprise me if it didn't fall away.
Okay, so where would you be potentially interested, or at least slightly interested in a buy opportunity? What would it have to do?
Me, I would be looking at getting it through a trend line and that sort of stuff, because it really is a big sideways pattern that has been going on for nearly 12 months, and so it's not falling away much, even though it fell down to that 43 cents here in May. It really is a sideways move. So I'd really be looking at just drawing like a trend line somewhere down around here and breaking through here. So I'd leave it some move here, because too many people might want to go in and jump in now at 40 odd cents or 50 cents and think, well, if it moves up to 70 cents and it's at 50, then I'm going to make 50% like Atomos. But Atomos was a whole different situation to me. It looked a lot more...
The pattern was so different, wasn't it?
The pattern, and that's why I brought it up. about 6 weeks ago.
This looks more bearish, a lot more bearish to me.
It does a little bit more bearish, but you're looking at the volumes through here. If we look at the volumes, they are higher through this little bit through here than they were back through here. So
yeah, so what you're saying is it needs to get back above that trend line.
Yes.
Yep, and start taking off through that trend line before you'd even consider it.
Absolutely. It would have to get through that sort of level before I would consider, and really show me why it's going to break through it, because there's other ones like WiseTech has taken off more recently, and it was doing not a similar pattern, but not too dissimilar to this one.
Okay.
It was doing that sort of stuff, and a couple of other stocks like that. So just
yeah,
be
look,
careful.
I mean, I'd even like to see it get above this line here, so I'll just grab a, I'd like to see it get above. See how all the opens and closes are below that?
Yeah, but you're more conservative than I am.
Yeah, there's
I'm a
lots.
cowboy.
Okay, just give me a second. Lots of opens and closes that occurred below this line. So I'd like to see it get through that and actually close above that, and then I know that it's on its way.
Okay, there you go. That's Janine's opinion. You've got mine anyway. But we do have a caller on the line. It's Martin from Sydney. Martin, are you there?
Oh, g'day, Dale. I am. How are you?
I'm fantastic. I hope you're enjoying lockdown there in Sydney.
Oh, yeah, lovely and rainy. Good to be indoors.
What's your question for us today, Martin?
Look, guys, you sort of mentioned, Janine mentioned on the show about sort of short selling.
Yep.
And how funds can take advantage of that to make a profit. And then buy it back at a lower price. I didn't quite get how they could sort of get money from selling it down. I know they cover their positions, but can you just give a little bit more detail on that?
That would be our pleasure, Martin, and thank you for the call. Janine, you know what to answer now.
Well, I was going to leave it up to you, actually.
No, you can answer it.
Oh,
he asked you. He likes you. He doesn't like me.
No, he's talking to you. But anyway, all right, so short selling is like, it's sort of like, and I know you understand the concept of it, but the concept of it's not easy for people to get, because somebody has to hold the stock and be able to put that stock up so that then someone else, an institution, can sell it and then buy it back in at a lower price. So that's essentially what they're doing. So say, for example, can we just talk about it from a super fund point of view? Because that's my soapbox one.
Well, I know that's your soapbox one. I was just trying to simplify it for people.
Yeah, so the simple thing is they're actually selling and then they're buying it back.
At a lower price.
At a lower price. That's really the crux of the whole thing. But they're actually borrowing the stock to sell it. So they could be borrowing it from your super fund, and you're trying to make money from the stock rising, and your super fund's giving that stock up so they can sell it off to make a profit, all in the desire to create volatility and the justification of creating a volatility on our market.
Super fund gets a benefit from doing that.
They get a clip, but they get absolutely stuff all, sorry to use that language, but they get nothing compared to what the short seller gets.
That's pretty gentle considering what others.
If the short seller's getting 20-odd%, they could, or 10 to 20% from a swift fall, and the super fund gets point something of a percent, why would you give up the stock for that?
I'm with you. But basically, they're borrowing a stock like I'd be borrowing stock from Janine. I go and sell it. I give it back to her. I buy it back later at a lower price, give it back to her, and I keep the profits. That's really what they're doing.
I don't think I'll give it to you.
You trust me?
No, I'm hanging on to it. Not when you put it like that.
So if you do want to chat to Janine and I, like Neil, Neil, wasn't it? Sorry. I've forgotten your name. Sorry, you're a good-looking dude. Give us a call, 92909988. Pick up your phone and give us a call. But next we do have a question from Daryl, who says, "Hi, Janine and Dale. I'm a past and current student with Wealth Within and actively trading the ASX. I've used conditional orders with a large, reputable Australian broker to buy and sell. But often these orders are filled around 10 a.m. market opening by a margin of a few cents. Then the price moves swiftly in the opposite direction to what I had hoped. Now I wait until noon before I trade so prices settle down. I'm concerned that these orders may be open to manipulation as I'm effectively showing my hand. Are there institutional buyers or market makers who can see and exploit my orders, or am I just paranoid? Thanks, Daryl."
You're going to love this one, aren't you?
I love this one. The answer is yes, Daryl.
What have you always said? You've always said, don't place your trade in the market, like as in a limit order. Just place it at market, and then once the market's open, and don't trade it until after 10:30, ideally. But it just depends on whether you're trying to put a big trade into the market or whether you've got to put a small trade in. But for the individual to try to go against the market, it can be tough in that start of where the market's opening.
If you look, to really answer your question, what Janine's actually saying is really, I think you're fine. You wait for the market to open, settle, then place your trades from that point of view. I don't have an issue with that. But when you do put your order on outside of market hours, they all know what you're doing. And with big brokers, and Janine and I have been in these broking houses with these big brokers, and the people that when you place your order online, it's all on their screen. They know who you are, and their institutional desk is right next to the retail
we'll take
desk.
all of those trades.
And they're going, the institution going, well, how much we're trading today? What do you guys got? Yeah, we'll take all those trades. They do that all the time. There's a lot of chatter. And so, yes, it's manipulated. So there's no doubt in Janine in my mind. You're not, what did he say? He's not a conspiracy theorist. It actually does happen, mate. That's the answer to the question.
Really good question. All right, we've got another question we have is from Nick. G'day, purchased Coles at $15 and been happy holder since. I limped in with only 1.5k, but wondering your thoughts on topping up. I know dollar cost averaging something people do, but what about accumulating on the way up? Thanks, Nick. Yeah, so that's interesting, isn't it? So dollar cost averaging is often when the price is falling and people are buying lower to sort of average out their price over time.
Dollar cost averaging is both. Up and down.
yeah, but it's bogus, isn't it?
Well, yeah, it's not that great. But anyway.
Often people say, well, when the price falls, do I just buy more? And the industry say, yep, just buy it. You'll be able to get it cheaper. And over time, in theory, you get an average price, don't you?
Well, you do, but the answer is no. And to me, it's like if you bought something at $1 and then it goes to $1.10 and you buy more at $1.10, and let's say you bought $1,000 at $1 and then you put another $1,000 in at $1.10 thinking, well, okay, I'm going to average my price up. But what if at $1.10 it starts to fall away back to $1? Now you've lost 10 cents on the $1.10 trade, which means your dollar trade is down to 90 cents, so to speak. So you're not getting any money. So you have to be really careful when you do buy on the way up, because eventually the stock's going to turn over. And so on one of those buys, you're going to lose on one of those buys that you have, and that will start taking, depending on how much you put into it, will start taking profit from the rest of them.
So we teach traders that they can add to their positions, but it's done in a very sort of organised and controlled way, and mathematically organised, so that you're not taking on too much risk as you're actually going up. So to actually double up your position like that, like Dale's saying, you're taking on more risk than what you actually need to. But how does a person do that, and how should he do that?
What do you mean?
If he's going to add to his position, because he knows dollar cost averaging is not necessarily the way to go, but then if he wants to build up his position over time.
Well, that's why people buy they talk about buying the dips. So they say wait for the dip and then buy more, then let it rise and wait for the dip and then buy more. I'm not a big subscriber. That's okay, but I'm really not a big subscriber to that. It's probably better to me and it depends on how much you're going to add and everything else, but I find so many people in the last 20-something years, 25 years, I've seen so many people, they keep doubling up and doubling up and doubling up.
But then for someone who's got like 100,000 or whatever they've got, and they're just dividing it up into 10 equal positions, we say 8 to 12, and that's one thing. But if someone's starting out with small amounts and they're looking to build up their positions over time, they've still got to add to those positions. So
yeah, but that's what he's not. We don't know. He's got one. We don't know whether he's got 1 or 15. We don't know. And that's
but are you saying that he should be building up other positions?
Correct.
Or instead of just building up existing holdings, have more until you've got 8 to 12?
Yeah, if he's had one stock of $1,500 in it, I'd go and buy another stock with another $1,500, and then another one with 1,000 until I've got about 8 shares, and then I'd slowly look at what I'd add to that. But you'll find at that point in time when you've got about 8 to 12 shares, you'll be selling some every now and again, and then you'll compound it into new trades, if that makes sense. If some
shares trigger sells and you have to get out of them, and then you might be buying other stocks.
Correct.
So you could buy the next one at the full position as your portfolio value goes up over time.
So you keep adding at a percentage. If you can continually put a position size at 10%, so you'll not always have 10 positions, but all your new ones at 10% at a higher price because everything rises.
At a higher value of your portfolio.
And so you'll keep compounding that way.
Yeah, okay.
So you can either buy positions at the same dollar amount every time, like $1,000, or you can.
And that can work for when you're starting out, can't it?
And that works for when you're starting out, yeah. But generally, once you get going, just keep it at a percentage ratio, like 8% or 12% or 10%, whatever that is.
Yeah, but read your book. That's got all of that in it, hasn't it?
Yeah, that's a good point. My book's got everything in it. So, but good question, thank you. Now we have a question from Joe who says, Dear Dale and Janine, in 2007 I purchased Westfield shares at $21.92 and still hold them currently in the form of URW and SCG. They are not worth much now. Do you see any upside on these shares? I'm thinking that they are better opportunities than continuing to hold them. Your honest and educated opinions would be much appreciated. Thanks, Joe.
Great question, Joe.
Yes, I know I should have stopped losses, but I've only learned about these in the past year since regularly listening to your shows, Joe. Great.
Yep, okay. Now, I thought you said you fixed that.
I did.
Right.
I must have been talking too much.
I don't know what you've done, but it's made it worse now. I can't get out of it. All right.
I'll fix it while you talk.
It.
How's that?
All right. Uniball, Rodamco, Westfield, which is URW. You can see the monthly chart on the left-hand side of the screen there. Now, what's happened is it's come off a bottom. Okay, I can appreciate where you're coming from, Joe, and it's great that you've emailed in this question and just sort of, you know, you're prepared to tell us about a stock that you're actually in loss with. Now, the challenge is right now that someone could sort of say, well, I may as well sell it because it's not worth much and I could put it into something else. In the short term, I think this looks good. So it looks like it's actually setting up for potential. If it takes out the low here in week ending 23rd of July, I'll just expand the weekly chart up, then the risk is to the downside.
Yeah.
But if it goes up through this recent peak here, which is just of the week ending 13th of August, this stock could take off. So I'm actually thinking that it's at a perfect point to be asking this question for this particular one. So this is one of the shares that Joe got. Now the other share is SCG. So this is all the shopping centres, S Centre Group. It's been consolidating sideways. Recently it's seen a nice rise this week, which looks promising. So it could make its move up from here. You probably get a nice trend line down there. Looks like a trough that's come off that low there. We've got a higher trough there. If this thing goes up for the next couple of weeks, this could be good for this share.
I agree with that.
So it's one to watch, but of course, you know, obviously if it takes out this recent low here, which is just 2 weeks ago, then there's more risk to the downside.
So what you're saying to Joe is just because you're down a bit on the shares doesn't mean you need to exit them. It's about a managed exit.
Well, she's at a point where, like, she's in them now.
She's in them now anyway.
And they're fallen heavily. So how do you actually manage it is what you're saying.
If they're going up, stay with them. If they start to go down, just get out.
Well, look, it's her decision if she wants to get out of them and lock that in. It just depends on what she's...
Joe. I'm really trying to get it out of her.
What she's willing to risk. But, you know, I would say that there's no reason to hold it if it did take out that low. Okay,
there you go, Joe. Andy's our next email. So, hi, Andy. And Andy says, hi, Janine and Dale. Hope you guys are well. I've picked up a bag of units in FMG at $19.49 at what looks like to me as a support level, and I believe ex-dividend date is the 30th of August, which brings me to my question. Will I receive a dividend paid in October, and how will it be calculated? Keen to hear your thoughts. Warm regards, Andy. Well, you know this one back to front, don't you?
Look, I mean, you know, it's a big question, isn't it?
So when's he going to go? So will he get the dividend? That's his question.
Will he get a dividend if he's in it now?
It goes ex-dividend on the 30th of,
Yeah, if he's in it now and it goes ex-dividend on the 30th.
He's not asking where it's going.
If he's still holding it, but it's falling at the moment, so why would you hold a stock for a dividend? That's my point.
It's going to fall after the dividend.
It's going to fall further after a dividend.
So is it at a support level? That's why he bought it?
It is at a support level right now, but it looks like he's jumped in to try to get the dividend. That's what it looks like to me. Does it look like that to you?
He didn't say that. He just said he bought in because it looked like it was at a support level, but he's just asking whether he's going to get the dividend, which is yes.
Well, he's catching the falling knife for a start. Yeah. To try to get a dividend, that's what it looks like.
Yep.
When a stock goes ex-dividend, often it can fall more than the value of the dividend.
Yep.
So therefore, why would you do it?
I 100% agree with it. Now he's asking about how the dividend is being calculated. Yep. Basically, go to the FMG website and they'll tell you what the dividend announcement is and how they've done it all and what they're proposing to do. So,
looking at announcements is what you're saying.
Yeah, looking at the announcements on the FMG website. So, because I haven't seen the announcements for its dividend at all.
No, I haven't.
Yeah, so do that. But anyway, thank you for your question, and that's all on our thoughts on FMG.
Our intention each and every week is to take a few live callers into the show. So if you missed out this week, then you'll get another shot at it next week. That said, the best way to ensure you get your question answered is still to send in an email. So if you've been sitting, watching the show and thinking, I should ask Janine and Dale a question, then my advice is don't think about it, just email your question right now.
Now remember, in order to show your appreciation for us helping you by answering your questions and educating you, all we're asking you is that you subscribe to our channel first and then send the email in. Now we strongly suggest you send your email in now to be in the front of the queue.
Well, that is it for tonight's show. We hope you not only enjoyed what we presented, but also received great value from our answers to your questions. Now it's your turn to help us, and right now hit that subscribe button on your screen to say thank you to the team who put in a big effort to bring you this show each and every week, and some of you did promise me you would do that tonight.
Also remember to put this show on your calendar to join us right here live on the Australian Stock Market Show every Tuesday 7 to 8 p.m. Now if you'd like to have your question answered on the next show, send an email to info@wealthwithin.com.au and type Wealth Within Live in the subject line. Now remember, you must email. No other form, must email, and you must do so before 3 p.m. on the day of the show. Whilst the question is fresh in your mind, you can email us right now.
As always, thank you for joining us, and we hope that you have a great week, and we look forward to joining us again next week. For now, goodbye, good luck, and good trading. What did